go first. I have the chart up. So I'm looking at Roblox, and you're gonna see with me a lot of times I just use the same plays again and again, especially the long plays, because I know how the premium is moving. So we got into Roblox today at about $1.24. The put is Roblox 40 put for September 16, and it was up about 20% at close. And basically, if you look at it, it's been downtrending. What else? Hold on, let me take the 200 out. And what I'm looking at here is, wait 1 second. It failed right over here, and we've got a bunch of supplies here, so it's going to be hard for this thing to break. So it's underneath the supply now, which is what we want. The levels that I have for this, I'll quickly show you. 41, 37. So this is if the market doesn't get crazy. I believe people will still sell and take profits. But if we get really weak, you can see all-time lows in September for this. And again, I don't like to think the best case scenario. This is like an okay scenario that we see around 41.85. This thing's down after hours too right now. Roblox is super weak. I saw a big flow. 3.6 million that came initially, and those guys, most of them are still in there. So that's my play right now. This one's about $1.40 right now for September 16 for the $40 put.
Perfect. I'm actually glad you touched on Roblox because I have shares in Roblox, as many people know, and I started protecting myself. It ran up to $51, and I got a September put. Actually, not from your call out, not from us discussing it. I was just like, I need to start protecting the stocks that I have long-term investment in, that I have a lot of money invested in, right? So I didn't do that in the past, and I just started reevaluating some of my strategies and the things that I was doing moving forward. And there's a lot of ways I could have minimized my downside, and one of them is just doing puts on the stocks that you have a lot of money invested into, right? And you see it as an insurance, not as like a put, but more of an insurance, right? What's $40 a month on an investment of $5,000, right? That's not a big deal. And granted, yes, if it goes down, for example, I bought Facebook at 300. That was like my average. My average is actually like 290. But imagine had I just gotten a 250 a month out when they had their earnings and it just dumped. I would have killed it. I mean, it went all the way down to 150. So if you have a lot of money allocated to a specific asset, maybe think about doing puts as an insurance purposes. Okay, not necessarily to make money, but just to avoid the downside or the massive downside that could potentially hit the company that you're invested in, whether it's Apple, whether it's Facebook or Microsoft or whatever you're invested into. Just start thinking about that mindset of, I need to have insurance on these assets, just like you do with car, just like you do with your medical. Doesn't mean that you're going to get in a car accident tomorrow, but you want to have that insurance just in case. And so that's what I've been doing as well, and as well as cover calls, as you guys know. For my lunchbox, guys, I have nothing. I have nothing that I was really eyeing this week. I bought a couple more shares today of Match.com. I like that stock. I started scaling in, so I bought a couple more shares in that, as well as Norwegian Cruise Lines, because I'm trying to do the cover calls for both of those. And the Norwegian Cruise Lines, I bought 50 shares at $11.99 when it had earnings, and it was really, really bad, and it dumped. I noticed that was like the base for it. So I got some there, and I was expecting to continue to drop, and it didn't end up taking off. Actually, it went all the way to $14, almost $15, and now I think it's at $13. So I'm waiting for it to go down so I could buy an additional shares to equal to 100, so I could start doing these cover calls. Really, everybody, like, if you're not into trading, seriously, look into cover calls, especially if you have over 100 shares in an asset. The risk is really minimal. You won't make a shit ton of money or anything, but it's kind of like you're creating your own dividend for that stock, essentially, on a monthly basis or weekly basis or whatever you want to call it. It's not bad. Compound effect. But that's all I got, man. Yeah, I don't have anything in my lunchbox today, guys. So that's it.